The Bed Bath & Beyond taking a big leg lower in the last few hours. It's down 17.25% right now. The stock had been up as much as 45% earlier in the day, but started selling off after a regulatory filing by Ryan Cohen, the GameStop chairman, filing an intent to sell as much as 7.78 million shares of the home goods retailer. Karen has been taking a look at this filing because just yesterday we were talking about him buying way out of the money calls in the stock, and the shares went sharply higher on the back of those purchases.
Yeah, I don't know why that came out yesterday, because that was in the original 13D. So he spent not a lot of money to buy those, and if that's what he started selling, he probably did nicely on that. But so he owned 11.8% of the company. Just looking through his filing, I'm not sure where he sold it, at what price he sold it. Clearly, it's way up from where it was, but actually he did pay in the mid-teens for his stock. So it wasn't quite as much of a home run as I was thinking. I was thinking that he actually would have to forego some of his profits because he owned more than 10%, sold some of that within 6 months. There's a short swing profit rule, but I don't think that it applies here, actually, because I think he may have sold it at not very different of a price. So that's sort of interesting. From the low, he's made a ton of money. I'm not sure all in what the sale price is, so I'm not sure how much money he made.
So let me get this straight. The disclosure that he had bought all those call options, which were, January 60, 80, and 75 strike calls, that was made in a 13D that was dated how long ago, as opposed to because we treated it yesterday because
that was the news point.
I'm sorry, Karen, what'd you say?
4 months ago.
4 months ago.
4 months ago.
So somehow it came into circulation yesterday. It moved the stock higher. I mean, regardless of when it actually came out, people were latching on to that idea yesterday, and the stock was up a lot.
Right. Well, here's the deal. He's an activist investor.
At the moment, though, there's no evidence to me. There's no evidence to me that he did anything in those calls yesterday or the day before.
Okay.
Yeah, all right. So here's the deal. In March of this year, so assuming that he was building a position, he launched an activist campaign. He had an agreement with the company. They put 3 of his representatives on the board. The stock shot up. It came back in, and it went as low as $5 after that. So whatever he was investing fundamentally wasn't working, at least in the near term. So the idea that he bought a bunch of calls, knowing at some point he would disclose it, knowing that would maybe get this kind of, this sort of activity going in the stock and the options, and then the day later, after the acknowledgement of the options, he unloads it. Listen, if you're a hedge fund, fine, have at it. This is what you're charged with doing, right? Buying things, having them go up, and sell them when they're up. But if you're an activist investor and you're placing people on the board of this company who have a fiduciary responsibility to help the management guide this company to a successful outcome, this doesn't seem appropriate.
Karen, you wanted to add something?
Yeah, I don't think that's what he did. I think that information was out there. Why it was all, so exciting yesterday, even though it was months old, I don't know. So if you're thinking he did sort of a pump and dump, I don't actually agree with that. He made this filing months ago.
Right. It's interesting, though, the time. I mean, I'm not saying that he did anything at all, but I mean, it's interesting the timing that the stock has this huge pop yesterday on information that is old.
That the market
but somehow
it
got pushed out there as if it's new.
Well,
and then he sells.
And we forget that Bed Bath & Beyond has had many, in the last 2 years, you've had a number of these squeezes in the stock. And we talked about yesterday, short interest is over 30%. At times, it's been over 70%. So there's a lot of dynamics at work. And Ryan Cohen is just almost the spark here. And again, the debate is, does he know he's the spark? And that's where there's a fiduciary responsibility to not move the market. And we're not saying that right here. But it clearly was a strange confluence of events yesterday.
Yeah. I mean, I feel bad for retail traders. Guy, I mean, what a roller coaster this is. I mean, I guess you know what you're getting into, but still.
Do they know what they're, I mean, I think some people know what they're getting, but I think that's exactly right. I mean, that's who winds up getting hurt in all this, I think, is the retail investor. I mean, this stock is traded, probably close to 600 million shares over the last couple of days. And my sense is the lion's share of the people that bought this probably bought it at higher levels than it's trading now. So trying to tread lightly here. I'm not suggesting, I don't think any of us are suggesting he did anything illegal at all. In my world, it does not pass the smell test. And I'll just throw that out there. I mean, it seems a little bit much for me. Those calls were never, I think those calls were bought, thinking that here's a chip we can play at some point, understanding the impact it would probably have on the market. And I think that's, to a certain extent, what Dan is saying. We're not suggesting pump and dump, but those investments and those options were a low-cost way to get things moving in your direction.
Like there was actually some kind of groundswell of emotion around the company. Is that here with Bed Bath & Beyond? I mean, Guy, I don't know. Can you get your scented candles and your potpourri in other places? I'm not sure. But is this healthy for the market? This is a retail investor that's been emboldened in the last few years, has money to spend. We argue that actually wasn't actively selling even through the worst of the market lows. It was more the institutional guys. So maybe it's a pat on the back, and maybe we leave these guys alone. I mean, I'm not saying that a lot of these. A lot of these folks have been making money in this market.
It could be that a retail investor was behind getting that disclosure out again in the marketplace about the calls.
His people leaked that, okay? Let's be clear, okay? So that's how that got out. I'm just saying, okay? And then here's the deal. So the guy becomes this meme lord because he joins GameStop, right? He becomes the chairman there, and that is the poster child for this thing. Then he goes over to Bed Bath, and that's in March when we see the stock do that, but the stock doesn't work, and then we have this whole Fugazi activity this week. It doesn't pass any smell test.
Karen?
Yeah. So to Dan's point, I'm curious what will happen the next time we see Ryan Cohen file a 13D. But this one that this 144 that came out today, this says he started selling yesterday.
He said when the stock was up a lot.
After the option information was leaked.
Up a lot.
After it was
I mean,
out
can
for a
you
while.
blame him? The stock's, yeah.
Yeah.
So I'll see what
who's going to blame him, Karen? All those people that Guy said, all those all those bag holders, right, who had the rug pulled out from under him. And so this thing has the potential to turn against these sorts of folks too.
Yeah. I mean, what the reaction is to the next ice cream.
We've seen this before, though. I mean, we've seen this so many times, and again, because of social media, because of Reddit, because of chat rooms, this is why you get pronounced and exaggerated moves. With stocks, with the short interest is over 30%, and there's a lot of people involved in this trade.
Right. And by the way, I'm sure a lot of retail investors benefited and profited from yesterday's run because of that information and may have played a role in propagating that information. So let's not discount that either. Coming up, minutes.